You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program here on the old Options Insider Radio Network, where we go beyond the world of equity and index derivatives, even futures options, go a bit beyond the commodities, other things we like to talk about, all the way over to the world of crypto. We're going to talk the Bitcoin, the ETH, and everything else that's lighting up your tape out there, the volume, the volatility, the SKEW, all that good stuff, and a lot more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, in the aforementioned network. Glad to see so many of you are continuing to discover this newest addition here to the network. Remember, if you like what you hear, not just for this Crypto Rundown program, this is only one of about a dozen different shows that we have here on the network. So if you just subscribe to this one, listeners, you're missing out. Make sure you subscribe to the full network. And if you like what you hear, keep those reviews coming so folks can just continue to discover the Crypto Rundown out there. We'd love to see so many new folks joining us all the time, particularly in these troubled times. We'll keep you sane here. We'll keep you informed and educated here on the Crypto Rundown. Without further ado, let's get right to it. It is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the program where we welcome on guests from throughout the world of crypto and indeed beyond. And today's guest is a newcomer to the program and indeed to the network. He is Ian BALINA, the CEO at Token Metrics. Ian, welcome to the Crypto Rundown program.
Thank you. Proud to be here.
And Ian, as we are wont to do with all of our first-timers here on the network and indeed on the program, why don't you go ahead and give our audience a little bit of an overview of your background in the financial/crypto space, as well as what the heck it is you guys do at Token Metrics.
Yeah, so my background is in analytics. I worked at IBM Watson Analytics, where I helped work with IBM clients and help them leverage AI to find insights in data. Then I joined crypto in 2016 as an investor, then fell in love with crypto, quit my job in 2017 to go all in as an angel investor, traveled the world making investments in, at this point, over 10 countries, made over 70 investments in the space. People know me publicly for turning about 20 grand into over 5 million in crypto back in 2017. And everything was made publicly, transparently through a spreadsheet that was open sourced, where I logged all my trades, all my investments, and also my process of investing in crypto called Token Metrics. So we've taken that same concept, think of it as Moneyball for investing in crypto, and we've now added AI to it. So Token Metrics helps crypto investors build profitable portfolios using artificial intelligence, based on crypto indices, rankings, and price predictions. And we have customers in over 50 countries worldwide.
Interesting. Like a lot of our guests, you came from other areas before you moved to the dark side of crypto. And I'm curious, a lot of our guests have had a lot of different inflection points, things that really lured them over to the dark side of crypto. I'm wondering, what was it for you? Obviously, you leapt full into the pool. You went straight from quitting your job into doing crypto full time pretty quickly. So what was it that really lured you into the crypto space as a whole?
Well, so I got into crypto back in around October 2016. I had some prior experience investing in equities. And when a friend of mine came to me and said, "Hey, Ian, IBM is doing lots of great things in blockchain. Can you put me in touch with the IBM blockchain team?" And I said, "What do you care about blockchain?" So I began grilling him, basically trying to qualify and make sure, and just trying to learn why he was really into Bitcoin and blockchain. And he told me he was launching a crypto fund. And it kind of just boggled my mind that somebody, my friend, my age, I known for about 5 years, was 27 years old and launching a hedge fund. Not just a hedge fund, but a crypto hedge fund. Because back then, to me, Bitcoin and cryptocurrencies were just something pretty much from Silk Road, the dark web. I didn't really even know you could actually invest or trade in crypto. So he kind of really opened my eyes, and I began delving deeper into the crypto space, and I learned more and more about the space, began dabbling and investing in the space. Then fast forward about 3 or 4 months in, I put about $2,000 into Ethereum, and Ethereum announced the Ethereum Enterprise Alliance, where they were basically working with Microsoft, JP Morgan, all these big names, and the price doubled in about a week and a half. And I said, "Holy cow, this beats the stock market." So that's when I began kind of delving deeper and deeper into it. And then as I began to have more success, so I didn't go all in. My first purchase of crypto, I bought about $100 worth of Bitcoin and $100 worth of Ether. Ether was about $9. Bitcoin was about $8.50. And I just kind of learned more about the space. So I got books like The Age of Cryptocurrency, just getting a bunch of books, just trying to learn more about the space. As I got more comfortable, I began to dollar cost average into the space about every 1 to 2 months. And after more success and more wins, then I kind of said, you know what, this is probably the biggest wealth transfer in history. I'm basically losing money not being full-time in crypto. And that was about September 2017.
That was good timing because, of course, right to the end there is where we saw the big march up to 20,000, and we all know what happened beyond that. Let's get into token metrics a little bit, because you kind of mentioned this spun out of your spreadsheet you first started working on, where you were tracking a lot of your crypto trades. Now you guys are out there actually offering what are effectively AI-driven crypto indices, so anyone can kind of get in on this party that you've been in on there, Ian. So walk us through, what are some of these AI-driven indices that you're offering folks right now?
Right. So we have our team of analysts that go through, and we do fundamental analysis on cryptocurrencies. We do code reviews on the technology. We do technical analysis, and we take all these different data points. Then we also infuse AI into it to make it even better, right? So think of us as really a platform for people who maybe don't have the time to delve deep into cryptocurrencies, but want to make sure they're building a winning portfolio. And they also want to make sure they're not really investing in scams, because this space is still very brand new and there are lots of scams in this space. So our team kind of does the heavy work for people by going out there, finding all these different projects and making sure everything kind of makes sense, not only from a professional investor standpoint, but also from a quant perspective, right? Because AI is the future, quant investing is the future. PwC basically put out a report saying that the most profitable funds in the crypto space were quant funds, right? So quants are not just dominating Wall Street; they're also now getting into crypto, and we provide a platform where the average retail investor can still compete with them, right? So we're basically kind of outsourcing the quant work to retail investors and traders.
I remember a few years back when the crypto bloom was really still full on the rose and we were marching just past the 20,000 peak. I remember hearing at the time a lot of crypto hedge funds were launching, and they were getting, unlike the traditional hedge funds, which were struggling at the time to even get 2 and 20, that had kind of gone the way of the dodo. You were hearing crypto funds getting 3 and 30 with the 3-year or 5-year lockup. When I heard those kinds of things, I was like, wow, maybe I'm in the wrong part of the space. Of course, that was a kind of a brief flash in the pan. I don't think they're still getting that right now, but there's a lot of interesting things to parse on that front. Obviously, Bitcoin is still the big dog, the 800-pound gorilla in the room. So I'd imagine most of your indices are based around predictions for Bitcoin, or are you getting beyond Bitcoin as well there, Ian?
Actually, beyond Bitcoin, right? So while Bitcoin is, in our opinion, still the best cryptocurrency out there, in terms of trying to get better returns, we think there's more value, especially when it comes to a risk-return basis in altcoins, right? But because of that, that does not mean going out there investing in just any altcoin, right? Because altcoins, they do have lots of risks. So our platform tries to go through, and basically we do, I would say, 3 main things, right? The first thing, we take our ratings. We take all our data on cryptocurrencies, and in real time, we rate them, right? So based on fundamentals, technology, technical analysis, and we create one single holistic grade that basically showcases how bullish we are on a particular cryptocurrency in real time. And then we also cater that to both traders and also long-term value investors. So somebody who has a weekly or 1-month time frame will have a different grade versus somebody who has a 1-year or longer time frame. So being able to cater to both different investor types. And then we also have price predictions. So taking our models and then, taking our data and asking our AI, okay, based on historical pricing on this cryptocurrency, where will this cryptocurrency go in the next 1 month? And then being able to transparently track and model this price prediction. So we have price predictions for, at this point, over 200 cryptocurrencies, which is pretty unique in the space. And all this is powered by AI, with some accuracies ranging from anywhere from 70% to some as high as 90% or higher, right? And then lastly, taking those same ratings and creating indices that can then create model portfolios that people can model, right? Because not everybody has the time to go through and manually do research on different cryptocurrencies. So being able to take our insights and turn them into model portfolios. So at a high level, think of our ratings, something kind of like Morningstar for crypto, right? So how Morningstar, you have analysts who go through and review equities or stocks. So we're kind of doing the same thing with cryptocurrencies and giving people confidence into their investments and as they build their crypto portfolio.
And is it a one-size-fits-all type of model? So if I come to token metrics, I pay one price and I get access to all of these various analytics, or is it kind of vary depending on how many currencies I want to watch? How does all that work?
Yeah, so we have 3 plans. So the hardware plan gives people access to the top 20 market cap cryptocurrencies and the indices. And then the next plan is the investor plan. Investor plan gives you access to the price predictions. So price predictions for up to 100 different cryptocurrencies. And then we have the professional plan, which gives you access to everything, plus also our private group and also our private investor network and private calls.
And how much does the private tier go for?
So we have 2 plans. So it's a monthly and annual plan. So the private tier, annual is about $3,500 or so. Monthly is about $400 a month.
I like the name of the basic tier, the hodler tier. That's a fun one over there. You know, it's interesting. Obviously, we devote a lot of our time here on this program to looking at some of the other metrics out there, the implied volatility, the realized volatility, the volatility skew. A lot of this coming from the derivatives markets out there. I'm curious for you, Ian, as you're analyzing a variety of different factors to make up your indices and your recommendations, how much, if any part, do these analytics and indeed the derivatives markets do they play in your analysis, Ian?
Right now, they don't. Right now, we merely just look at crypto data, right? I mean, we do have kind of just more like market analysis from our analyst team, where we do kind of factor in macroeconomics and just other markets. But in general, when we're doing ratings or the indices, it's all based purely on crypto data.
And a lot of the people coming to you, I mean, obviously they could use these predictions in a lot of different ways. Do you see them applying this analysis as a use case? Because obviously if you think you have a price movement, there's a lot of leverage to be gained by using the options as opposed to just going in the spot, for example. Do you see a lot of your users diving into the crypto derivative space after using your analysis here, Ian?
Not quite. I mean, because most of our platform focuses on cryptocurrencies that don't have options, for example, right? But one thing we are kind of doing research in the future is trying to see how we could possibly add tail risk hedging into our portfolios. So, for example, being able to buy puts to kind of act as insurance on altcoins, because altcoins do have lots of volatility and risk, especially with market crashes. So, for example, going back into Black Thursday in crypto, basically around March, basically mid-March, when Bitcoin, Ethereum, and lots of other cryptocurrencies declined as much as 30 to 40% in value in one day. So being able to hedge against risks like that is something our team is actively trying to add. And one thing to do with that is basically buying options.
Yes, that's certainly an interesting prospect. You can have your own Black Swan for crypto fund there, Ian, which I know is a branding a lot of people like to get behind these days. That'll drive some people to your door outside of the hodler plan, of course, there, Ian.
Yeah, absolutely.
Well, you mentioned the Black Thursday in crypto. This has kind of been a hot button topic of debate. A lot of our guests for the year plus that this show has been running out here, which is what exactly is Bitcoin? Is it correlated? Is it uncorrelated? Is it inversely correlated? Obviously, days like Black Thursday when it sold off almost more than 30% intraday certainly point towards a high degree of correlation, particularly in those moments when it's hitting the fan, and then correlation tends to go to 1 across the board. But obviously, you've been crunching the numbers and analyzing the Bitcoin space for some time. How do you view Bitcoin as an asset class? Is it uncorrelated? Is it somewhat correlated? Is it inversely or slightly negatively correlated? How do you view Bitcoin overall compared to other asset classes?
Yeah, great question. I would say historically it's had no correlation with with any other asset class, but during flight to liquidity, especially during Black Thursday and Black Swan events, pretty much people were just going to cash, right? So I think that was one of the few times where Bitcoin pretty much went down versus any other asset. But in general, Bitcoin bounced back faster, right? Bitcoin bounced back faster than gold, bounced back faster than other asset classes. And in general, I think long term, it will have no correlation. But right now, we're basically going through very unique times where there's so much capital being printed and infused into the economy, where pretty much not only are equities going up, but also Bitcoin and crypto is going up, right? And if anything, now there are other cryptocurrencies that are basically breaking away from Bitcoin's correlation, right? So when Bitcoin goes down or basically goes sideways, lots of other cryptocurrencies now are actually going up, right? So now, in a way, you have other cryptocurrencies that act as a hedge versus Bitcoin and the economy.
Well, that is interesting because that's one of the other things people have been trying to see the crypto space really evolve a bit to get beyond just Bitcoin. Obviously, Bitcoin is still the 800-pound gorilla. Everyone looks at that dominance rate to see how much it is driving everything else out there. And the Bitcoin tide tends to drive all boats. We've had a lot of analysts on here, technical and otherwise, talking about how challenging it is to apply some of the analytics they like to do outside of Bitcoin, because Bitcoin is just such a dominant force in the space. So it sounds like you're finding some of those pockets of liquidity out there, Ian, that maybe aren't as completely dominated by Bitcoin as some of the other altcoin here.
Yeah, absolutely, right? Because, Bitcoin is great, but especially in times like this, you definitely do want to find other ways to hedge versus Bitcoin, right? And Bitcoin this year actually hasn't really had that great of a year, right? There have been lots of other cryptocurrencies, especially cryptocurrencies in the space called DeFi, right? Basically basically getting finance, think of legacy finance, and putting that onto a blockchain, right? So investments in that space, cryptocurrencies in that space, have been outperforming Bitcoin drastically this year, right? And there've also been ways to hedge versus Bitcoin.
That certainly is the hot buzzword these days. So many of our guests these days getting excited by all things DeFi. But before we go, Ian, you mentioned something interesting, which has kind of been on the tip of a lot of people's tongues in the crypto space of late. Because obviously, in the broad market, we've seen the Fed stepping in with pretty strong supportive measures out there. That's been driving concerns or issues about inflation. You've seen the Fed just come out last week and say, hey, we're going to kind of take the reins off of the economy a little bit and not be as worried about inflation. That also got people a little bit spooked about the perhaps 1-2 punch of inflation coming down the road. We got the Winklevi out there now writing big letters saying Bitcoin is the only real investment to hedge against inflation, obviously talking up their book a little bit. What have you guys seen on your platform in the last few months? Has all this other activity and this broad, supportive / disruptive activity from places like the Fed and the government, has this been driving people to your platform as they may be starting to get a little bit more concerned about things like inflation and starting to move towards crypto as a result, Ian?
Yeah, absolutely. Since the Bitcoin halving, our growth has been exploding. So in May, our platform grew 113%. Then in July, we grew 60%. And then this month we've grown over 200%, right? And this has been incredible, right? Especially considering that what's kind of going on out there in the world is different, right? With the economy and everything. Lots of people are gravitating to different forms of protecting their wealth, right? So not just in crypto, but also with gold, right? Gold is over $2,000, for example. So people are trying to basically get out of cash. They basically think cash is trash, and they're trying to find other ways to protect their wealth. And the crypto market is blowing up. For example, going back to DeFi, DeFi has blown up from being less than $1 billion in total assets locked up to now being almost $9 billion in basically a few months. Right? Lots of money is flowing into the crypto space, and from exchanges to our platform, everything is basically blowing up.
Well, I'm glad to hear that, Ian. And if folks are intrigued, they want to learn more about what you guys have cooking over there in Token Metrics land. Maybe they want to get on that hodler plan for themselves here, Ian. Where should they go? What should they do?
Yeah, so go to tokenmetrics.com and join. So we do have paid discounted trials. So for just $2, try basically join the hodler plan, or for $5, join the investor plan for 1 week. Try it out, and if you have any feedback, just contact us at tokenmetrics.com.
We like to leave our audience wanting a little bit more here, Ian. So you kind of touched on the various indices you guys have to offer right now, what you're working on. If you want to leave them with any maybe little hints, any little teases, any little nuggets of what they can expect from you guys coming down the pike in the coming months, now is the time, sir. The floor is yours.
Yeah, so we're working on adding sentiment analysis. So being able to pull in sentiment data from Twitter, from Telegram, from news sites on different cryptocurrencies, and creating indices based off of that, right? So being able to kind of trade the community's thoughts on particular cryptocurrencies, because the space is very, very volatile and things move very, very fast. So being able to find what's trending prior to it being trending, and kind of being able to trade based off of people's emotions is something that people have been asking for. So that's something that's in the pipeline in the next month or two.
There you go. We like it. Check him out over there, tokenmetrics.com. Ian, thank you for joining me today on the Crypto Hot Seat. And we'll pay attention to how all these various indices and these initiatives over there at Token Metrics, how they unfold in the marketplace in the coming months, sir.
All right. Thank you.
Now we have to keep on rolling with the show right on into the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the portion of the show where we break down what the heck's going on in the world's leading digital asset, of course, Bitcoin. Who knows how much longer that'll be around, but for the time being, it is still the big dog in the space. And coming into showtime, we've seen net a heck of a lot of nothing on the week. We were at 11,758, easy for me to say, 11,758 at the end of showtime last week. This week, coming into the show, we're about 11,728. So a whopping 30 handles move, which in a week's time in Bitcoin, not a heck of a lot. So as a result, we're seeing the vol come in a wee bit here. Remember, a lot of these analytics coming at you courtesy of our friends over there in SKEW land. SKEW.com is the place to go to check it all out for yourselves. If you did that, you'd see that the realized vol for the 30 days, remember, that's looking back 30 days now into the distant past now of Bitcoin. See what the market has actually delivered from a volatility perspective. That's down to about 47%. It was 58% last week, so it's been a relatively quieter period over the net aggregate last 30 days. Now let's go out to the future, the 30-day implied, looking out 30 days, see what the market is forecasting for volatility. That's also come in, but a little bit less. It's hovering right about near where it is, 54%, down from 56% last week, which is kind of interesting. If you check in with our friends who've been on the show many times, Genesis, and I encourage you to do so because they have a great Genesis options newsletter you can check out in between episodes of this show. They've been looking at realized vol versus implied out there, and it's kind of an interesting area out there. Realized vol is back below the 25th percentile, they say, according to their analysis for pretty much all time frames, all of the term structure, which is spanning all the way out until you get out to 180 days and 365 days. Realized vol is a little bit above the 25th percentile out there. That shows there is what's called contango. The far-off futures have a little bit more juice, a little bit more vol priced into them than the near portion of the curve out here, listeners. But in the near portion here, realized vol is below the 25th percentile out there. So that's still interesting to watch out here, as not a heck of a lot going on right now in the space. And implied vol kind of holding steady where it is. There's just enough juice to warrant these levels right now. But interesting to keep an eye on this and see if this does indeed continue out here. The folks at Genesis saying they're nearer dated within 30 days options in terms of implied vol down to about the lows of the year that they've seen out here right now. So interesting times out here. We'll see. These are, again, most other years outside of 2020 that aren't filled with pandemic and double hurricanes and civil unrest and everything else that is completely unprecedented this year. In most other years, towards the tail end of August, the dog days of summer, you'd expect to see a very quiet, very tranquil period in an asset class, and Bitcoin is no exception. It's kind of following along that route. We're just surprised because this is such an unprecedented year from pretty much every other perspective. The SKEW also signaling kind of a bit of a coin flip out there. It's down from about negative 6.1% to about minus 3%, a little bit less than that, about minus 2.7 out there. So the SKEW is pretty much symmetrical out there, which is showing almost an equal bid to the calls and the puts, which is kind of showing the options market kind of shrugging its shoulders, listeners, and saying, oh, we don't really know where this thing's headed over the next 30-plus days. We're going to just kind of shrug our shoulders and see out there. So it's interesting to watch all this going on. Even though the call-to-put net is trickling up. It was 68% last week in favor of the calls. Now it's 75%. So we did see a lot of OI come off the board with August expiration. We'll get to that in a little bit. So maybe that's changing that ratio a little bit out there. But on the SKEW perspective, it's looking pretty symmetrical, which is an interesting one to watch. Let's move on out to what we're seeing in the term structure, which again is contango, which we've said before. If you don't know what that means, check out some of our other programs like This Week in Futures Options or Volatility Views, where we talk about the contango and the term structure, all those types of terms, define them in a lot more detail and talk about them ad nauseum. Don't really talk about them that much here on this program, but if you look at it out there, it's effectively showing that the Bitcoin futures market is pricing in a lot more vol down the road than it is right now. So pricing in pretty much a quiet end to summer here, and then maybe a little bit more turbulence coming in. Of course, we do have the big election coming up in the U.S. that's being priced in as a very volatile event in the equities markets. I'd be surprised if we weren't seeing something at least a little bit similar here in the Bitcoin market going forward. Open interest, again, we saw August roll off the board. That August 28th expiration took a lot of paper with it. So the OI net has dropped quite a bit. DEREBIT was at about 1.6 billion worth of notional on our last show. Now they're down to about 1.2 billion, so 400 million coming off the table out there. CME is down to about 87 million. Ledger X 51 million. OKEX number 2 here with 90 million. And then we've got bit.com coming on strong there, still with about 61 million. So that actually puts it, let's look at it in terms of percentage of open interest. DEREBIT's at about 81%. Then we've got CME and OKEX actually tied around 6%. And then we've got bit.com closing in at 4% and Ledger X bringing up the rear there at 3%. BAKKT, unfortunately, still at a whopping 0 out there. Looking forward to seeing some more options trades on the ledger for them sometime in the near future out here. Looking forward here to what we saw this week on DEREBIT in terms of the volume. Another light week pretty much. Again, end of summer, kind of quiet times. People are not glued to their trading screens, so they don't have to be. 169 million was the biggest notional spike on DEREBIT this week. That was on the 25th, and the 162 million on the 24th. That's well off the recent highs of over $500 million back we saw in July. So not too long ago. A little bit quieter out there right now. The big trades for the week, we'll actually parse some of these in a little bit. Some of the bigger trades are showing here. We're on CME. We'll get to those in a little bit. In terms of what was lighting it up on DEREBIT, 10,000 puts on the 30th were pretty active. 351 going up paper buying those for 0.005 Bitcoin back when a Bitcoin was 11,687. So it looks like maybe a little bit of hedging down along that line. We also saw the 10,500 puts pretty active on that same day. And the SEP 10,000 puts, later on that day, also active again for weird splits of 286.5 going up there as well. So the 10,000 put was pretty active across the board on the 30th out here. Weird sizes notwithstanding out here. The big trades coming into today, pretty much again, the SEP 10,000 puts lighting it up here. So that's kind of the line in the sand people are drawing, I guess, now that we're kind of hovering. We mentioned the SKEW was kind of symmetrical, so maybe some folks deciding to pile back in on some push to the downside. Either the 10,000 puts leading the charge again today, 1,669 on the tape coming into showtime. So again, a pretty quiet day out there. Looking at the months, across the board, seeing where the largest percentage of open interest is aggregated. Remember, August just came off the board. Aug was the big dog. I had about 62,000 contracts as of our last show. All that's gone the way of the dodo now. So we got SEP coming up in the rearview mirror. Remember, I've said it before. It's no longer really in the rearview mirror. Now it's the big dog. It's in the driver's seat. It is the next month up. It's also a quarterly, and folks tend to like to aggregate their liquidity in the Bitcoin space in the quarterly. So it's got about 57,000. So it's already almost caught up to August. It's got a ways to go before it catches up to June, which had 114,000. We'll see if it can get there. It's got a little time. It may have a bit of a challenge on its hands. June was pretty active, but we'll see. Then beyond June, we go out to DECE again. Again, it's the quarterlies. 24, almost 25,000 contracts open out there for number 2 in DECE. Then we got to March again with 17,000 beyond it. So again, it's just quarterly after quarterly here. Ad infinitum. Let's look at where the strikes are active right now. Remember last week, it was pretty much an exact tie between the 11,000 and 12,000 strikes with just a tick under 16,000 open on each of those. This week, it looks like a lot of that has gone off the board with August because this week it's the 12,000 strike firmly in the lead with about 13,400. 11,000 is a distant memory, the 11,800 contracts open there. So 12,000, close to at the money, makes some sense here. 10,000, though, if it continues to light up the tape like it has last couple of sessions, maybe 10,000 will come on a little bit stronger. Right now, there's only about 7,900 contracts open on the 10,000 strike. Moving on out to CME land, it's kind of an interesting week. The SKEW stats, and I'm trying to confirm these here during the show here. We sent our crack researchers out to look at this because they're reporting big prints of the OC 13,500, 1,700 vertical going up on CME 1,700 times. I remember, I think they've had some issues in the past with that multiplier 5x, so take that into account. That could be 1/5 of the size from that perspective. But still, that's what they're reporting for one of the bigger prints out here, 13,500, 17,000 vertical. That would be an interesting one if that is lighting it up. And someone, looks like, we don't have sides on that, obviously, but looks like maybe taking a little bit of a flyer here to the upside. We'll keep an eye on that. The rest of the CME products doing decent paper this week. Not so much on the options front. That's the biggest trade. That's why that kind of leapt out at us, because other than that, it's been most of the days well under 200 contracts on the options. Futures, similar story. Light today, about 4,500 contracts on the tape. Friday, 10,000. Thursday was one of the bigger days, 14,000. 10,000 on the tape on Wednesday. Tuesday, 16,000 and 10,000 again on Monday. Let's move on out to BAKKT, our old friend, the BAKKT volume bot, doing his regular breakdown out there. Unfortunately, not a lot of paper to parse for him. The traded contracts was at about 3,600. That was down 67% on his reports, and the open interest was about 12.28 million. That's actually up 26%, so OI up a little bit over there on BAKKT. Go figure. And I mentioned earlier, before we roll on out of Bitcoin, really quickly, the Winklevi have been making some news out there, talking up their book. They do own a lot of Bitcoin. And so go figure, they would espouse its virtues out there. They call it these days the only long-term inflation hedge. I kind of got into this with Ian earlier on the token metrics. This is a big topic of conversation these days because the government is effectively printing a lot of money, ejecting a lot of money into the system. The Fed is talking about inflation and kind of dialing back their concerns over inflation. Concerns over inflation were one of the key drivers for the crypto space to begin with. So it makes sense they would come out and hit on this. And they tried to compare and contrast Bitcoin versus other various asset classes folks might like to look to as inflation hedges: gold, the dollar, and oil. And obviously, they're not big fans of the dollar for the Treasury just printing money, as they call it, ad infinitum. So they're not big fans on the dollar. Moving on to oil, they kind of point out to the discovery of more supply with the advent of fracking, while also showing, and this one kind of has some heat to it here. The COVID-19 has made it clear that the industry is, quote, vulnerable to demand shocks. And of course, we all saw that a few months ago when WTI crude oil futures went negative for a brief period, shocking the heck out of a lot of people, including a lot of long-time participants in that market who knew it was technically possible, didn't think in practicality it could actually happen, and yet it did. And that turned a lot of people off to energy. And of course, long-term, they think moving towards less carbon-based sources of energy will weigh on the demand for crude going forward. And of course, they also mentioned gold. That's the classic inflation hedge. But as Ian even mentioned on the show recently, that's up over 2,000. That's at all-time highs now. You have to really want it to get into gold now. A lot of that inflation move has already been baked in to that price. They also kind of get a little bit in left field here. I like this. They also mention as a risk to gold's prices the future of asteroid mining. That's going to eat into the value of gold going down the way. That one might be a little bit farther afield. Commercial asteroid mining, they say, threatens the status of gold as an inflation hedge in the future. We have to play a little bit of wait and see on that one, but still interesting nonetheless. They obviously come to the conclusion in their article and in all their talking points that Bitcoin is the quote-unquote ultimately the only long-term protection against inflation. Agree, disagree? If you're listening to this show, I'm guessing you probably have some thoughts. You can check out that over there in Gemini land as we keep on rolling into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe. Not sure if there's many asteroids to be found available for mining here in this version of the universe, but we'll keep an eye on it. The Winklevi certainly seem to be very intrigued by all things asteroid mining. That's not what I expected them to say when it came to the anti-gold article. There's a few other places I probably would have started first, maybe with the valuation before I got to asteroid mining, but c'est la vie. To each their own. Number 10 on the top 10 this week, Binance Coin, $3.3 billion. Remember, standard caveats apply. Take these valuations with a bit of a grain of salt. Number 9, Crypto.com Coin, $3.5 billion. Number 8, Bitcoin SV, $3.6 billion. Number 7, Litecoin, $4 billion, almost even. Number 6, Bitcoin Cash, $5.12 billion. Number 5, our old friend Chainlink, lurking in the top 5 there, $5.7 billion. Number 4, XRP, jumping back up, $12.7 billion. Number 3, Tether, $13.35 billion. Numero dos, ETH, $48.9 billion. Number 1 with a bullet, good old Bitcoin, $216 billion. Let's get on out to the number 2 crypto derivatives marketplace. Number 2 crypto marketplace overall. Of course, we're talking ETH. Had a big week here, up 32 handles from last week. So a good little run for the ETH bulls out here. Let's look at the vol landscape, see what we're finding out here. The realized vol going back 30 days is actually unchanged. It's been kind of locked at that 81% for a couple of weeks, which is kind of interesting, showing that it's moving, but not enough to move it off that 81% level out there. 30-day implied, so going forward now, what the market's best guess for volatility will be 30 days from now, that's down a little bit to 75% from 86%. So taking a little bit of vol off those options prices. Remember, the implied volatility is what you're going to pay if you go out there to buy an option right now. So they're a little bit cheaper out there right now. In terms of overall volume, kind of like Bitcoin, a light week. Again, the dog days of summer, not usually hot times for volume. The biggest spike we saw recently was on the 25th with about 28 million with the notional going up. Prior to that, a couple of weeks ago, we saw 66 million on the 14th, and just a week ago, we saw 46 million on the 21st. So not a lot going on this past week. ADV down slightly as well. It was 33 million on our last show. Now it's down to about 30 million. So again, seasonally, this should be a quiet period. ETH living up to some of that here this week. OI, of course, a lot of that came off the board with the August expiration. Remember, we hit a big high back in June of 165 million. Kind of blew through that recently. We got up to about 413 million last show. Actually, the OI has kind of managed to regain some of what came away at the end of August here, because we're actually only down about 1 million notional right now. It was 413 last show. It's at 412 right now. So a lot of it came off the board at the end of August, but a lot more OI seemed like it piled in to make up for it, because we're pretty much right back to unch for where we were last week, which means a lot more new positioning came in on ETH over the course of the past week, probably as a result of this decent 30-odd handle move we saw out there this past week. Moving on to other names here in the top 10 of the altcoin. Ripple, our old friend Ripple, giving back a little bit down. Looks like about half a cent coming into showtime. It was at 28.2 cents. 28.7 was last week, so down about half of a cent out there. Other than that, not a lot going on in XRP land, kind of hovering shy of that 30-cent level for a little bit now. And we've got Bitcoin Cash down about 15.5 handles, and Bitcoin SV down about 9.25 handles. As we keep on rolling to our final segment, it is time to answer your crypto question.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to Crypto Questions, a portion of the show where you guys usually ask us questions. Going to turn the tables a little bit here today and ask you guys a question. When you guys have asked us a lot, it seems kind of straightforward on the surface, but if you mull it over a little bit, it gets a little more interesting. We asked you guys quite simply, Bitcoin options dominating the tape. They're the big dog out there from a crypto derivatives perspective. That won't always be the case. Other products are coming on the scene. Which one do you think is going to be the next big hit with crypto derivatives traders? Gave you 4 choices. Good old ETH. That's a stalwart out there. Maybe XRP, if you can get some juice to it out there. Chainlink coming on strong. It's in the top 5 already out there. Or Tether lurking out there as well. Got 4 choices for you floating out there. This went live before show. So in the early blush here, we got ETH winning as I kind of expected with about 2/3 of the vote. But Chainlink putting up a good showing here as well. 22.2%. XRP, probably some wishful thinking of folks out there at 11.1%. They'd love to see it at a valuation where options are more warranted than they are right now. It's kind of hard to justify an option on a 30-cent underlying, but if this thing could rally ho to, let's say, back where it was at its highs, $3 and change, or maybe even a little bit beyond that, let's get in the $30 range, or then some options might make some sense. Then it'd be a little bit easier to see XRP that's one of the reasons why the options market hasn't materialized. I mean, it's a firm top contender there in terms of market cap and interest in trading volume. Yet, options-wise, it's kind of hard to, what are you going to put, 25-cent strikes, 30-cent strikes? It's kind of hard. We talked to some guests before who have managed to source some liquidity in the OTC side of the XRP options market, but it's challenging because it's a 30-cent product. So in that case, the underlying is the option. So we need a little bit more price action in XRP before that's going to come alive, but interesting so far. No love for Tether. Maybe you guys agree, disagree. It's going to be a little bit of a flash poll. It'll be pretty quick. But you guys will have a chance to listen to this as soon as it goes live to head on over to that options and make your voice heard. Let's see what else we got here. Eli chiming in here. Eli wants to know, do you think CBOE will get back into crypto now that the CME is having success with its Bitcoin futures and options? Interesting question, Eli. I've kind of put this to both of them, to CBOE and to Gemini, about what really happened with that Bitcoin future they offer. Back in the mad rush, everyone had to list Bitcoin products back in December of 2017. Everyone and their mother was super hot and bothered about all things crypto. And, Bitcoin was at 20,000, so CME and CBOE racing each other out the gate. And CBOE had the one that seemed like on the surface would be more palatable to the growing audience of retail out there, which was the one-coin future. CME is a 5-coin future, much more expensive, much beefier, meatier product. So it seemed like early on, maybe the smart money was on the CBOE contract, and yet, lo and behold, it didn't really last that long, and they delisted it a short time later. And, if you ask CBOE what happened, they kind of point the finger at Gemini. If you ask Gemini what happened, they say, go ask CBOE. It's one of those kind of things. It's kind of hard to get a straight answer, but we've heard interesting things about some of the institutional players wanting a little bit more sizable contract, which, of course, CME offers. And also maybe having some issues with the single point of settlement there on Gemini versus the CME one that had multiple venues being put into that Bitcoin reference rate over there. And also CME obviously has more of a track record driving futures volume than CBOE did. But interesting stuff. I don't think CBOE is out of the game by a long shot. They don't have a listed product right now, but they are investors in RSX. I think some former folks over there from CBOE, I think, are on the board now as well at RSX. So they clearly have an eye on the space. And I've asked them this many times over the intervening years since they delisted that product here. Do they plan to get back into the space? It seems like they're kind of playing a wait-and-see mode. I do think the success of a listed venue somewhere here in the U.S. has to be the next step. Whether it's CME, whether it's BAKKT coming online and doing a lot of paper, whether it's something else, someone has to have a hit with a listed, regulated product here in the U.S. DEREBIT can do all the paper it wants. Until something gets approved and tradable here that the regulators shine upon, CBOE is not really going to get in that space, or other big exchanges for that matter. So I think a lot of people are watching the CME contract with great interest, and it is starting to attract some papers. I do think this will help, but I think their stake in RSX and others will help drive it even more. If that takes off and they do pretty well, they have a piece of that already, so that could probably help maybe lead to some products with them or more interest in the space. I do think, though, the short answer to your question is yes, I think they are watching this product with great interest. And other exchanges are too, because is kind of the big dog out there right now from a listed contract perspective. And if it does well, that'll pave the way for more contracts for everybody to trade in the near future. All right, everybody. Unfortunately, that music means we've come to the end of another epic journey through the world of all things crypto. I want to thank my guest here for joining me on the program, Ian BALINA from Token Metrics. Check them out. Maybe you want to kick the tires on that hodler program for yourselves. Maybe you like to blend a little bit of AI with your crypto trading. Either way, Token Metrics is the place to go. You can find them on Twitter as well, at Token Metrics Inc. Apparently Token Metrics wasn't available. Go figure. Check them out for yourselves, and we'll see you back here throughout the week for all of our other programming. Remember, we do a lot of other shows on this network, not just crypto. And we'll see you back here on Monday for more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.